Hi. So today we'll review the chart ES chart, the S&P futures. Um, Today is August 10th. So I'm reviewing today's chart. I'm primarily going to focus on the US sessions. I'm going to quickly review the overnight session. As you can see, the Sunday it started and then it went down a little bit and then somehow it stopped here and then it all the way and then it has been a progress upward progress from here, right? And then as you can see there is a choppy move downwards, and let's focus primarily on the US session. Okay, so I'm in Pacific time zone, that's why you can see my timings are like 5 and 6 o'clock, so which is my 6:30 is my US session, so US open, right? So as you can see, so the morning started, right? And then the first thing that I did was I drew my overnight high and then overnight low. So overnight high is just drawing a support high from this one, and then overnight low. And okay, so I trade primarily on the price and volume chart reading. So we'll go detail of each and every moves here. Okay. So as you can see, the morning I woke up and then I saw the first thing was after drawing these lines, it's been going in small waves, like coming down and then this thing. When it had multiple touches, right? So the I woke up around like 5ish, 5:30ish. So here, sometime around here. So the first thing I've observed is okay, it's going this way, right? So I drew up a channel. Okay, so why I drove this channel, because it has multiple touches, touch here, touch here, touch here, touch here. So that's why I drew this channel, and then from here again a couple of touches. So it's a good channel. And one thing that I observed is it is holding here like 4 o'clock Pacific timing. It is holding here, it is holding here again. When the morning 5:30 also, it had some good buying volume. So one thing that you can deduce from here is okay, the volume is sorry, the buyers are a little bit more bullish, because it did not touch the demand line. So this portion, this side of the line is called demand line. This side of the line is called supply line in the channel. So it is not even touching this area, and then it is holding at this area. And so the gray pluses are plus line is my yesterday's high, and then blue pluses plus line is my today high. You can see the right side YH is yesterday H, today H. So it's those two are like my key levels, like yesterday high, yesterday low, today high, today low. These are drawn automatically on my chart every day. I don't need to draw it like every day morning. So what I observe is okay, as 5:50, right? So 5:50 is 5:50 Pacific timing. So it came up and then touched here. So far the background condition is primarily bullish. Is it super bullish? No. But but it is, since because it is holding here, it is bullish, and then it touches this bar. Zoom this a little bit so you can see the volume clearly. Okay. So here you see this one, it touches the supply line, nothing happens. I mean, so sorry, it touches the supply line, it's a good one. And then next one, supply happens here, supply comes up here, it start pushing down. So see the volume here and volume here. So it's a good volume, actually it's a good supply. And compared to this bar had some buying. How can I say that one? You see the length of the bar in this one, and then the volume is the next bar volume is also the same, but the length of the bar is almost half of this one, so that is how you can say that there is some kind of a buy. But still it does not mean anything at this time, because what I was expecting was, since this was holding, and then this would come up somewhere slowly with a not like these kind of bars, with a small movement, and then come under this today high, and then close up like this bar. It would come under like this one and then close up. Like I was expecting something like this. If that would have happened with a narrow bars from there, I would have taken a long, but that did not happen, so I did not take any long. And as you can see, it starts going up, and Okay, so look at this bar, the 625 bar. So it's still not, it's 5 minutes before the US Open, right? So the bar has a good volume compared to other bars. And then what did it do? It broke the supply line. So, okay. So do we take a trade immediately after we broke a supply? No, we do not take, because we wait for a week pullbacks, and then typically I make sure that clearly it has a low volume before I take it. So hey, anyways, there is no trade here. None of these are tradable items. As it starts going up, you can see the 630. So 630. Sorry, this right? Okay, 630 had a good volume, and then it starts going up, going up, going up, and then what happened? So our overnight high reached, right? And once, as soon as the overnight high is reached, what happens? Then see this bar. The volume is all more than the previous bar, but it is still holding sideways, right? Reason is there is supply in here, because if the entire volume is all buying, the bar would have broken down and then closed above the overnight high. But since it did not break, what happened? The next bar, hold on, see this one, see this bar. This is a good solid supply bar, meaning solid selling has happened here in this bar. So look at the length of the bar and then the volume. So so in this complete buying, in this complete uptrend, this is the first time you're seeing a good supply bar with some good action. Like, this was a down bar, even though this was still has supply. This is a good bar, because it closed towards the highs. So it's still a slightly bullish, but this is a solid supply. And then see the next bars, next couple of bars, goes down, down, and then it tries to break the yesterday's high, couldn't break it. So this is how you read. So the first thing is, the buying is happening in this one. Okay, and then you see at the resistance, you see the supply for the first time. As it starts coming up, it holds this level, and then as it starts coming up, now you know that your background is a good supply, right? So this is buying, this is selling. Selling means supply. So now you know there is, in your background condition, there is supply. But it starts going up. Look at the volume. The volume is declining, right? Meaning that the buying has weakened compared to this buying. Look at the buying, right? So our background condition is supply, and then the buying has demand has weakened. As you can see, the volume, see this 3 bars volume, see the 3 bars volume has declined. And what happens now? See this one. So see this sudden increase in volume, and what happened to this bar? As it starts coming up, it this suddenly drops it. So supply comes up and then pushes it down rapidly, right? Strong supply, weak buying, and then a supply proving again, right? As soon as it proving again, right? So you see this bar, and this bar has the lowest volume after the US Open. And what is this bar? Up bar, right? So this is where, as it starts closing down, this is where you can take a trade. You can put a short here. Why? Because now you know who is the the guys that are in picture, sellers, right? Because selling is happening here, buying is weak, and then selling proved again, and then the next attempt that gave for the buying. Now buying is pretty much tired at this stage. Like, the eventual option is only is going to go down. The chances of it going down is more compared to going up, right? So now this is where you take a trade, and your stop loss would be somewhere around above the high. As you can see the, if you have did not take a trade here, you have another option here, and then you can take it. As you see, it starts going down, it broke this one. So okay, so if you're taking a short, right, where would my target be? Okay, my first target, of course, would be this one. Second target would be this one. And then as it starts coming rapidly, I drew this channel, just to see in case it would have any impact. But this one even broke even far faster with a higher volume. See, the volume is increasing now, right? So selling has happened. So what's happened, right? So okay, so as it starts coming down, see this bar. This has an increasing bar, and then it went down, and then it closed all the way above. So what does this mean? This means this is the first sign of buying is happening, because if this entire volume has been selling, if they see this bar volume, it has moved from here to here, but this one moved only from here to here. You see the closes, right? He closed here and then the next closed here, only little, because there is a lot of buying. So the primitive drop, this is also in this downtrend, the first sign is the first sign of demand happen here, right? And see that one. So okay, so this is where I exited, because I was scared. My target was this one at this stage, like overnight low, right? Overnight low is here. I remember, as in the morning I woke up and I drew these two lines, because I know these are the key levels, typical key levels that action happens around. So okay, it broke this one. Okay, and then what happened, it broke. So typically your target should be here, but I was scared, and then I did not hold, even though I read this thing that see, if it had been a stronger bullish, it would have at least closed above this bar, closed above the close of this one. It did not even close above the low of this one. In fact, it closed below. So you could have held it, like until this target, but but it's up to you, depending on like how you do this, and that's how you trade. You can it still is a profit from here to here. It's a good profit, right? So okay, so now it broke this one. Now it broke the yesterday's overnight low. And look at the next bar. What happened? So what is the purpose of breaking, right? What is the purpose of, why do sellers want to break these supports, right? Broke the support. And then what should have happened? So it should have happened going down. So the two factors that would happen is, you should follow through, because with it broke the support with such a strong volume, you should have expected to go down. So okay, my thing was, it broke it. I was expecting a weak back, a weak pullback. Weak pullback means like a small, like these kind of bars. You see, this is called as weak pullback. This kind of narrow pullback happens, and then I would take a short here. But what happens this one, with a strong volume, the buying closed above this one, closed above the support. As soon as I see this bar, this is called a spring. In spring means it comes underneath the support, and takes away all these trades, and then closes again up in, like in 1 hour, like couple of bars. Okay, this is an extremely bullish in nature. Why? Because see, I'm not trading this bar just because this went underneath and then closed above this one. I'm reading all the entire factors, because I'm sorry, I'm not taking a trade just because it broke the resistance and then closed above. I'm trading because previously this was an overnight low. Okay, and the fact that it broke with such a high volume, that is a second factor. And third factor is, okay, see, typically these big money players, like what they do is, like when it comes down, people will think that, okay, yeah, it's just going to go down, and then a lot of people will be buying these shorts, right? They'll try to short it, like especially the breakout trades, right? Traders, they see that, okay, the support got broken, and then they put up limit orders here or somewhere here, and then but what happens is, right, they take up all these orders and then close it up, right? And because they know there are a lot of trades here. So these are the factors, because they'll take up all these trades contracts and then start pushing it up. So this is what happens, like when this bar has such a strong volume and then closed above like this one, you could take a trade here. You can put a limit order trade here, and then your target would be, of course, this one, right? As you can see, it was such a nice move from here. So another simple other thing is, like if this bar had been like a slow narrow bars, I would not take a trade. If this bar had same length, but if the volume was small, I would not take a trade. The main factors is, there is a first sign of demand here. See this one, first sign of demand here. The overnight low, it broke it with a good volume, and then immediately it closed above. So this is various factors. I don't blindly take just because it broke down and then closed above. These are other factors that I'm considering. See, the demand is there in the first sign, and then it broke again with such a high volume, and then there was no previous indications that sellers are in this under, when it went underneath, there is nothing indicating that sellers are going to continue. or below this one, right? So that is the reason why. So of course, exit will be here as soon as you can put a limit order. You don't need to wait for this one, for this to break. Okay. And okay, so we will be going more a little bit here. Okay, so again, so you see this bar. This bar, when it happens, right, with an increasing popping volume, this is bullish in nature, but I do not take a trade here because there are two levels of resistances. I don't know if it will break or not. So this is a risky play, and then your stop loss would be way below this one. So that's why you be careful when you take a trades. So of course, it broke this one, and then it came back again, came back here, and then starts going up. And so this is again, see this one after broke this one, all of these are like weak volume bars. See this one, see these volumes compared to these ones, a weak volume. So meaning that that supply is not, sellers are not that interested in selling, right? And okay, so these are not tradable items. As you see, this bar with a huge volume broke this mini resistance. So I did not draw this line at this stage. Only at this level, after two touches here, I drew this line. Okay, I wasn't sure whether this was holding. Only after this, I saw this was holding here. This was holding here. That is when I drew this line from here. I know that because of multiple touches, somehow buyers feel that this is the place that that they need to hold. So and then it came down. It kind of choppy up move here, and then it came down here. But when this bar happened, see, look at the volume here in this bar. It has suddenly increased compared to last previous three bars, right? So at this stage I thought that, okay, yeah, so typically, right, when an accumulation or distribution means at a resistance or a support level, a buying or level, a lot of buying or happens in the side when the price action moves sideways. Okay. And yeah, I know it's a brief thing, but this is what this is what typically is moves. This is not an ideal accumulation, I wouldn't say, but at least this is a buying zone. Every time this happens, though, some buyers are coming in, are buying it. So right, so and this bar with a popping volume happened. It went underneath all these bars and then closed above. I took a long. Then I was hoping that and then I put my stop loss underneath the yesterday's high, and then I was hoping that my target was just the blue line, right? My target was blue line, and of course, like what happened? This bar is a good bar, but as soon as this bar happened, I moved my stop loss to one tick above this one, because one tick above this one is because I whenever you trade, the commission fees and everything, right? So I make sure that I put my stop loss just one tick above, so that that whatever few dollars, that fees, that you will be able to clear it off using that one tick profit, right? So of course it triggered it, so it was like a break even target, a break even this thing. So it's I do that one because I have a very strict trade management that I follow. That's why sometimes I lose trades, like break even trades, even though if this you could have, I would have held it. Like, I could have, when it coming back again, when I read this bar like low volume, no demand bar, I could have exited, but I did not do that one. So it's all about personal this thing. Again, so it comes down, it touches the yesterday's high. See the where the demand has broken previously, so it is kind of test bar. But since it did not close above this my resistance line, I did not take a trade. But had this been, so this is a good bar, had this traded closed above this one, I would have taken a long. And then you can see it went above this one. Okay, an important factor. So this is same thing, right? It broke this resistance line and closed below this one. But this bar, you see this one, this was holding here, holding above this one. So that means there is some kind of a buying happening, and then this broke this one.